Rip.
Nice.
Do you know what that means?
Not at all.
Hit our button, baby. Oh my gosh, you are the classic hit the wrong button.
I like to laugh.
Dude, Andy.
Sorry, I got aggressive.
Switchboard.
Broke the
Precious switchboard.
right out of the gate. What is going on, everybody?
Back up. Bang, bang. Feeling that vibe, feeling that beat. Get our sound going here. We got a good one going.
Yes, we do. We got some good stuff to talk about today, but as you guys know, we like you to just enjoy that beat with us and just get active with it.
Bring it over here. Little shuffle. We're so bad.
Yeah, it's so bad.
It's Friday, though.
It is Friday. Friday, if you're into that.
So I'm talking about. So we brought on this little special. CK's he's grinding. He's got a lot to get done this afternoon. So
we're going to do the two-man show.
Yeah, a little alley-oop.
Yeah, a little pick and roll.
John Stockton, Karl Malone.
Michael Jordan, Scottie Pippen.
But wait.
Keep going.
If you're John Stockton, are you wearing the short shorts or me?
I would rock the short shorts, but I got thick legs, so it might look strange.
You're like bulging out of the short shorts. Now, this is a good one too. I'm excited because this is a hot topic in the real estate blog market, research, news, and it's all about veterans, specifically millennials, taking advantage of the VA program. So today in this video, we're going to break down the top 3 reasons why millennials are taking advantage of the VA loan. And of course, our beloved, trusted veteran mortgage advisor, Casey Carpenter, is going to be leading the episode today. Thank you, Casey.
Yes, sir. Thank you. Thanks for having me on the show. As always, shout out to all of our veterans and active duty military members and reservists out there. Being a Navy vet myself, I have a lot of dedication and pride with those guys. And I mean, whether you're in the service or you get out of the service, that's for life with you, that brotherhood. So just shout out to everybody in there that's still in the service, and the ones that are out, or even the ones thinking about getting in. Take the dive.
Are you out or are you in?
Are you out or are you staying in? You gonna re-up?
These are big things. So it's Friday, so we're not trying to create this like long lecture when everyone's
ready to get out, and we know you're ready to enjoy that sunshine.
Yeah, but we had a lot of people there want us to pop off episodes for the weekend, particularly on Apple, Spotify, iHeartRadio is a big one, Stitcher, wherever you get your podcast. We're on there. So if you're watching us live on Facebook, YouTube, whatever it is, don't forget we've got our convenient podcast channel, which is actually the heart, the pulse.
It is the blood of the system.
But I always think it's cool because I can always say, if you ever want to see us, you can go on, because a lot of the podcast listeners have never seen our faces.
That's true. And I can only imagine what you think we look like.
That being said,
hopefully it's very handsome.
Yeah, right. So let's go. Let's go. 3 reasons money and buyers love VA loans. Let's break it down nice and sweet, Friday style. Get the kids out of class early and on to their weekend.
Yes, sir. So VA loans. One thing is, these things have been around for a long time, right? I mean, the VA loan's been around for 7 decades. So this is a long-standing program for military members and veterans to take advantage of. So that's one key factor there. I think millennials, at least I hope, are looking at is, wanting to get into a program that's been long-standing. It's not something new that was just created, this week straight out of the market. So that's maybe something that's triggering their minds. Last year, the VA reported that they did 700,000 VA loans, and of a third of 700,000 loans, and a third were millennial VA or veterans or active military that were taking advantage of the VA loan. So a third of 700,000 VA loans were used by millennials. That's huge, Addy.
Yeah, not to get too off track from the subject of VA, but right now, I believe it's 39% year to date. Home buyers are millennials. So that's a big part of 2020. Who's buying homes, who can qualify for homes, what's important for them. So even within the VA, kind of bracket of loan programs use, it's consistent with the average, whether it's conventional, FHA, VA. So that's super cool. And it's a great opportunity for veterans because, man, I always say this, like, sincerely, thank you for your service. Like,
Yeah, thank you.
it's a great program they can take advantage of. So moving into that, what are some of the benefits? What else can we tell people?
Yeah, so 3 reasons, right? So we're gonna hit you at the top. 1, no down payment, guys.
There's a no down payment option, guys. So like most of the time, veterans are wanting to fully take advantage of that ability to go 0 down. But one thing that needs to be noted are their closing costs and prepaids. Now, your agent and your lender are going to assist with you structuring your loan and negotiating for the sellers to have those paid. But the ultimate goal for most people, especially first-time VAs, is to go 0 down. And really, if you haven't listened to our last episode of the 10 things you're going to need to spend money on outside of down payment, listen to that, because it hits like inspection, it hits
it's
sewer,
a great
like,
episode for sure. And it'll allow you as a buyer to understand the costs outside of your down payment. There are costs outside of the down payment for sure, and you need to be aware of those. And we cover those in great detail in that episode. But I mean, to have that option, and Addie's right. I mean, having 0 down on your VA loan is an option. You can obviously put money down on your VA loan, and that's only going to, help your loan structure even better. So I see veterans go both ways, but having that option out there, especially for a millennial, is huge. And they might not have the savings, right? So that's the driving factor. Maybe they do have a little bit saved up, and that can cover your prepaids, closing costs, and stuff like that. But the down payment's a big part. And so I want to kind of put that into perspective for you. So the average VA loan last year, and this is just countrywide,
national
national average, it was 253,000. So
loan amount
253,000 for the amount borrowed. Now $250,000. Okay. So a millennial buyer has the opportunity to put 0 down. Now, if you were looking at the same option for, let's just say, either a conventional loan, minimum down would be 3%. Addie,
if you're a first-time home buyer,
3%. At that same loan amount, you're talking $7,590.
$7K, baby.
Yep. So $7,500. That now, if you don't have that opportunity for the VA loan, that's something that you would have to come up with.
It's a big savings.
You save that there. Now to flip it on the other side, FHA, the other option, 3.5% down for that program, correct? And that would be $8,800 right there. So
that's a good point. I'd say one of the biggest ones, though, is like the interest rates on VA are incredibly low. And there's some factors in there with, do you receive disability benefits? Are you relieved from any sort of additional funding that fees that get rolled into the loan? But we're trying to make it simple here. The interest rates on the VA are aggressively low for a lot of different reasons. And that's one thing to know, because even if you did go the low 3% down conventional, that rate's going to be holistically and traditionally higher than your conventional rate.
Yes, sir.
Boom.
That was a good nugget. He threw in there for you guys on top.
I know in case he gives me that look, I got nothing else to add to that.
No, that's good. That's good. Nailed it. And basically across the board, guys, we just want you to kind of visualize that. I mean, that's a $75,000 to $9,000 savings based off of, a $250,000 loan for a veteran that they have the opportunity to save or not have to put forward. Let's move into that second topic. This is a big one.
Numero dos.
And we're going to talk about there's no mortgage insurance on a VA loan.
Yep, there's no MI, PMI, people call it all sorts of different things. But yeah, there's no mortgage insurance on the VA that's included in your monthly payment. So that's a big one, guys, because first of all, conventional mortgage insurance, conventional loans, there's a lot of different factors that play in. Is it one person? Is it 2 people on the loan? How good is the credit? How much down payment? So you have a sliding scale. It's like the good driver, bad driver discount on insurance with conventional. It's like, oh my gosh,
man, a lot of factors.
Yeah, if your credit reports had a couple dings and off-road crashes, like, ooh, that MI is going to be really, really high. I'm talking swings of hundreds of dollars, guys. Like, I pulled a $500 monthly cost on mortgage insurance for a $400,000 loan because of credit score. and it is what it is. But the veteran gets alleviated by that because the VA will back the loan and not require the mortgage insurance. So if you maybe have a little bit of a lower credit score, that's a huge benefit not to have MI, generally speaking, but that really helps someone that might be, say, sub 700 score.
Yes, sir. I mean, it is it could be upwards, a couple $100 a month savings, right? Or even more. So,
and I always like to say too, little tidbit, 10 grand in sales price or down payment usually affects the monthly payment on a 30-year about $50, super generally speaking, right? So if you're saving $100 a month in MI, just to be conservative, that's $20,000 more in buying power. That's not including the low rate, nothing else. That's $20K. If it can make a big difference. 40 grand, $40,000 in buying power because you don't have to pay $200 in mortgage insurance. That's a lot.
Game changer for you too. I mean, that could step you into that next level of purchase that you wanted to be at, but just couldn't get there initially because maybe, there could have been MI, but if there's not, that allows you to up that game a little bit.
Well, that's a game changer.
So rolling kind of comparison to that, I just ran, kind of looking at some similar stuff for our listeners and watchers out there, kind of maybe what that MI would look like on, again, this 253,000 loan amount national average. And again, so the VA loan, there's no mortgage insurance there. So good for you guys. FHA loan, you kind of be sitting around probably $180. Again, this is all generic rough numbers, but I used about I think a 7 or 720 credit score borrower across the board. And then sitting here coming back to a conventional, you'd be uptick of, maybe 200, 225 or something like that per month for your mortgage insurance. So right there, that veteran is, like we just mentioned, saving a couple $100 on their mortgage payment that most likely another buyer will have if they're, putting less than 20% down and don't have a VA loan. So
yep.
Damn, number two, guys. So 0 down payment is an option. No mortgage insurance on a VA loan. Great deal. So kind of these all kind of factor into it and fall into it. But our number 3 really is something that we see with veterans kind of help a lot just in the meaning and the guidelines behind a VA loan. And so what it is they're just a little bit more flexible with their credit guidelines. And depending on your lender, so that's something you always want to check if the lender has any overlays. But typically the VA is going to have less credit score requirements maybe than some of your other programs out there. Again, it can be all lender determined, but having the ability to accept less credit scores for veterans is a big deal. Because if you're at a sub 700 credit score, I mean, sometimes it can get dicey trying to get into a program. They just might have caps, but the VA actually itself does not necessarily have a credit score requirement, but your lenders will put in, whatever their overlay requirement is.
Yeah, most of the time you're going to see around anywhere between 580 and 620, depending on the lender.
Yes, sir.
So that's a huge advantage.
I mean, 520 or 580, right? Yep. So 580, you can go down, if that lender allowed you to 580, that's a big deal.
That's a really big deal.
And then so into that play, comes into your foreclosures, your short sales and stuff like that. So what we see is the VA actually has a little bit less time requirement for that borrower to get back on track than that would allow them to finance again. So you might see waiting periods out there, and we're just doing hypothetical stuff, but 4 years, where if something happens, a person has to wait 4 years. Well, VA might only require 2 years. We're not going to get into all the details on which that is.
Sure, shortened periods of wait when you have
shortened periods of wait when you have a
speed bump.
Speed bump on the credit. That's a great way to put it. Speed bump. So
speed bump. A little detour.
For you guys out there, if you had something, a VA, if you're a vet and you had a foreclosure or a short sale, something like that, there's bankruptcy. There's options for you. Have you and your spouse reach out to us, and how do you do that? 503
VIP
9038.
Yeah, hit us up on that line.
We'd be happy to go over that stuff and see maybe you're out of the waiting period. So,
and I think too, to add it together, like we had a really good a listener, a fan, become a friend with one of those speed bumps down the road thing, and it does take a long time if you're going to get an exception in that shortened period. So I always urge people start the process, because it's going to take a few months to get through triple levels of underwriting and second level reviews and exceptions. So if you do feel like, oh my gosh, I've had this thing happen in my life, talk to a mortgage advisor, hit us up on the VIP line. But start that process early because it can take a few months, especially right now where the market's just so busy. Half the world and their grandma are refinancing, buying, or selling. It just makes it really hard. And encouragement there. Talk early, get it going because it might take longer than you would think. So it's going to be proactive.
And coming back, like on a lender view of that, VAs have had the lowest foreclosure rate out of any program in the last 9 years.
Mm-hmm.
And the reason that is, and it's good for veterans to know this, that have VA loans or getting one, right? They're there to support you too in these speed bump times if you come across, some tough times. And so the VA will actually advocate on your behalf with that lender to try to come up with some kind of opposite solutions to help you avoid foreclosure. And that's a big deal. So you can know, and in your times of need at your loan, if you need help, the VA is there to advocate and try to help you avoid that foreclosure and come up with alternative solutions. And you don't really have that option on other programs out there. So,
well, there's a lot of really cool things that I like about the VA program. One being the entire underwriting system and evaluation of the file itself really is designed to do its best for the veteran and the veteran's family. And it's like, they never want a veteran to get into a home in a financial situation that they're not going to be able to be successful. So there's a lot of unique factors within that program, such as like, they'll ask if you pay for daycare. And that's something that needs to be accounted into the total budget. They ask how many dependents, how old they are. And there's equations on the back end through the underwriting and processing to make sure the veteran's in it to win it and they're not going to drown. So I love that.
I mean, we'll even estimate the, utilities maintenance cost, right?
It all goes in there. They factored in square footage, zip code, all that stuff. So it's really cool. I just think that's really important, and that's not to scare anyone. There's actually even more flexibility, especially from a debt to income ratio on a VA loan than I see in, say, a conventional. Yeah. So you can, in a lot of terms, if you have compensating factors, down payment, good credit, you can go much higher in the approval route than some. So there's so many unique factors, and we absolutely love that about the VA loan.
Yeah, absolutely. And I'm just kind of wrapping it back here and bringing the plane back down to landing. I mean, it's driven to help you succeed. And we look at it, lenders, underwriters, all from that standpoint. I mean, what's the best for the veteran? And so bringing it back here, guys, 3 main reasons why millennials love the VA loan. Number 1, no down payment.
No ticket down.
No ticket down with some aggressive interest rates. All right.
Great rates. No down payment.
Number 2, no mortgage insurance.
Yep. No mortgage insurance on your monthly payment there. That's a big one.
Couple $100 savings possible. And coming down to number 3, flexible guidelines for credit.
I think I might even want to put that as a human approach to the underwriting system.
Yeah. And you don't sometimes you don't see that often.
Yeah. We're not robots. Okay. On that note, if you, or whether you're a veteran or not, guys, we here at the MLO team are here as a resource. Mortgage advisors, your go-to peeps.
Absolutely. And your brotherhood supporters too. I mean, for me, I was there, I did a few different tours. So I just want to talk to people. That's what we say all the time.
You're definitely a talker.
I'm a talker. But seriously though, thank you for your service out there for all of our veterans, active duty and reservists.
How can they get a hold of us?
Well, you can catch us weekly on our Facebook live shows. If you're a podcast listener, then I would be checking us out on Spotify, iHeartRadio, and Apple iTunes. And you can check us on our YouTube channel where you can relive all these great moments we go through weekly.
Yeah, well said. Relive these great moments. Well, yeah, if you're a podcast listener, check us out online. You can see our faces. If you're watching us and you haven't, subscribe to that podcast channel. MLO Modern Loan Officer, found on Apple, Spotify, Stitcher, all those great podcasts, wherever you get them. Hit us up. We're there. If you've got a smart home device, you can type, hey, Alexa, hey, Google, play MLO podcast.
And then you get to listen to us all the time.
It should go. Anyways, once again, Casey, thanks so much for coming in on this Friday. We're gonna have class checkout early, both a shorty and a goodie all in one little package, right? Good man.
Shorties love goodies.
we'll just let it ride out with this music. Thanks so much, guys.
Thank you, guys.